guys, I will get started. So I'm gonna start a little different this time. Instead of starting with SPY and stuff, I'm gonna go to the monthly setups that we've kind of been watching, only because you'll start to see a pattern soon. But the end of the month is on Monday, so we basically start a new month on Tuesday. So next week we'll already have like gotten into the month when we do the study session. So we kind of want to see what's set up to possibly go for next month on Tuesday. Also, do keep in mind that because we're starting a new month, time frame continuity is going to be out of whack. It's going to be in conflict, and we won't uncouple until the following week. So starting with TTD, we've been watching this. It has not had the power to come down here and finish this move, and I doubt that it would do it. Well, definitely can't do it by Monday to finish it. So we would be looking for this to either rev strat on the month and come and take these folks out. Because remember, we're kind of like stuck inside this bar here. So we're looking for it to either rev strat and take these folks out, or keep continuing down and finally have the strength to take these folks out. So plug basically almost hit the target. I mean, could definitely still keep going another dollar on Monday if it wanted to and finish it. But yeah, that's the kind of what that was doing. Oxy is still in force on the month, but it's been kind of weaker, the weakest out of all of the energy stocks I'm noticing. And I read an article on Friday that said that it's highly shorted, which makes sense. So maybe that's why it's not moving as strong as, for instance, ZOM. Now, granted, ZOM did have earnings, but even before earnings, it was powering up. So it has basically taken out all these targets. It's at all-time highs. I think that there are still some earnings next week for energy, so it may not be time yet, but we are at all-time highs. We are at some exhaustion. So I'll be looking for energy to take a rest pretty soon. And then Starbucks didn't do anything all month. It's been inside. So, inside month breaks, we can see what it does. And I'll explain these these yellow dots in a little bit. Something I just learned from Jermaine on weekend shifts. So, Airbnb, same thing, inside month, but it's green, it's stronger, like to the upside. So if it decides that it wants to break out, then that might finally start to recover. And then Johnson & Johnson, we were watching for the outside month, and it outside month, and then came for this one too. So that was a good play. Congratulations if you took that one. So then the next thing I want to mention is the 50% rule. And so you guys know that I'm always watching these, but there's a theme here. And I want to scroll through all of this because I want y'all to see there's a lot of them. But basically the theme is that the bulls have stepped in for the month. And even though we only have one more day and these may not finish the outside bar, you can look forward to these hammers to go in force and finish, or take these out to make a new compound bar. So I'll post this list in the study session, because if I go over all of these, it's a lot. It's a lot. But one thing I also want to notice is the NASDAQ. So it's a big hammer on the month. So if this goes in force, and we can expect the market to be green, keeping in mind that we do have the interest rate decision on Wednesday. So these hammers could not go in force. And then, but also keeping in mind that the end of October and beginning of November is usually bullish, especially around midterm elections. So just what we have been seeing, that bullish activity, we can expect it to continue unless we have a surprise. Maybe that interest rate may be a surprise. So we'll see. So I just wanted to point those out. And again, I'll put this in the study time chat, the list. So, all right. So going to SPY, again, as y'all can see the theme here, SPY has also triggered the outside month, but we know that it cannot finish that in one day. So we can look to see if this will finish. SPY ATR is $8. I mean, honestly, it can try before the interest rate decision and then come down, whatever. But this is a pretty strong hammer on the month. So I really wanted to point that out. And on the week, it's, two continuations, so blah. But we are at a strong resistance point here. So it's really just, can the bulls continue? We have time frame continuity here. We also have this inverse head and shoulders that I've been talking about for a while. That's in force. And I was saying before that it was in force as long as we stayed above 360-ish. And you can kind of see where the shoulder is. Like if it would break 360, then this would no longer be in force. So now we still have, this can even be a bigger shoulder that it's making. So now I would still only count this invalid. If it would probably change the structure, like right here, 373. If it broke under there, and then it would completely invalidate at 360. But otherwise, this is telling you the bulls are still in control. And we do still have a gap here. So if we do have the strength to keep going, we have a gap at 408 that we can target. That would, by the time we got there, I'm sure that would coincide with this 200. So we can actually have a date with the 200. So that's SPY. What I wanted to show you with these yellow dots, I can go ahead and do it with SPY. This, I was just speaking on the weekend shift with Jermaine Cyberdog. So y'all go watch the show. He actually goes into greater detail about this. So I'm just going to briefly speak about it so that y'all can go and watch his show. But this indicator is basically a great way to stay in a trade or to use as stops. And it's called the SAR, parabolic SAR. Show y'all this right here, parabolic SAR. And so I wanted to bring it to the community to kind of show how you can combine this with also the Mobo Bands down here to stay in a trade, or to use it to kind of use your stops or move your stops up. So basically the short version of it is, if the yellow dots are above the price, then the price is in a downtrend and it's going down. If it's below the price, then it's bullish and it's going up. And it switches. So as you can see, it'll tell you here, okay, you're good to stay in this trade. But then it switched here. And it said, oh, okay, we're fighting, we're having this chop. Okay, it's finally picked a direction. And then once you could have gotten in here on this 212 up, and say your stop was down here, and you just moved your stops along with this. Well, let's just say with this because it's down there. If you put your stop here and then moved your stop up, this is telling you you can stay in the trade. The Mobo Bands, also on TradingView, because I know we showed it on Thinkorswim last week, also give you a buy signal and let you know, okay, well, I can get in here. These are the bands right here to tell you whether or not it's still good. If it's above the bands and you have a buy signal, then you can buy. Of course, right here it was a little bit of chop. But say here you wanted to confirm with these moving to down here, you have your 312 up. If you wanted to get in there, the Mobo Bands are saying, yes, you can get in there. And you put your stop in there, and as price moves, it's showing you that it has not gone back into these Mobo Bands, and it's still good. So you really could have been holding it from 367 with your stop it if you had that wide of a stop. And then you could have just moved it up. Now, this is just an example. Let's go on to 30. So let's talk about like Friday using these. You can really see it down here. This is not, wait. Okay, I'll do that just so it can be, you can see it a little bit better. All right, so you see how it's showing you that it's in a downtrend here, right? All the way up until Apple beat. So we know going into Friday morning, Apple beat, everything is bullish. All right, so what signs do I look for on the chart? So I see this reversal here, this 3-2, right? I see that these yellow dots have switched to the bottom, and yes, it does update like that quick. So I see these have switched from the bottom. My EMAs are crossing, and I have a buy signal down here on the Mobo Bands. So if I decide I want to do a 3-2 up, or you can go down to the 15 for a better entry, while this crosses, then you can see here that the Mobo Bands is telling you can stay in the trade. And you could have held it all day just using these and knowing that this is still below the price, well below the price. So, and then also, I'm just going to point out this change of character right here. Phi's feed that was telling us about, I think it was 2 weeks ago, 2 or 3 weeks ago, when he broke that down. But, you see the change of character here. There's all these confirmations. So that's just another confirmation, another indicator or combination that you can possibly use to trade SPY. So I had did a personal challenge this week and really trying to focus on just SPY and using the Mobo Bands. And I really, 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 really like that method. So that's SPY. Oh, I did not give targets. Oh yeah, I did give targets. Okay, so QQQ. So basically we know that this is following Apple and Microsoft and Amazon, and because of those earnings, it's been a little bit more mixed than SPY, but still following kind of the same pattern. We still have this inverse head and shoulders here on the day, and although we finally did fill this gap here at 279, if we decide to keep going, we do have a gap here at 307 that we could target. That this will probably come down and coincide with the 200. But on the month, again, the recurring theme that I was telling y'all about is that we have a hammer on the month. This hasn't triggered the outside, but it could definitely go. And also keeping in mind that because all of those behemoths dropped so much, and a lot of people are saying, oh, Meta under 100, oh yeah, I'll buy. Amazon under 100, yes, I'll buy. That could also push it up. So then we have full time frame continuity, so things we are keeping in mind. And I wanted to think it was SPY on the 2 week. Yeah, no, it wasn't. Yes, it was. I did want to show the 2 week because we are 1 week into it, so we do have one more week to go. But that's the 2 week on SPY, and then QQQ. We hit this target, but still a little more room. So we are at a resistance, though, something to keep in mind. But yeah, IWM, same thing. We did trigger the outside. This could almost finish if it has a bullish day on Monday, just because the ATR is almost $5. Target is 189. So let's see this on a day. Yep. If it does a 3-2. Oh, and there's a gap there. Gap is 188.34. That hasn't been filled. So this decides to keep going, it can go for that gap and try to finish that outside month, or it could just the hammer go in force and finish it real quick. So again, this is one that was barely an inverse head and shoulders, but it was enough to create a lower low, TTO, and go. So it's IWM, and then XLE. Of course, we've been watching because energy has just been doing its thing, and is basically going. This would be the next target for it, 93.33, if it's going to continue. But again, I feel like energy is a little extended. It just may have to have a few more weeks or whatever to go. But we're far away from EMAs. So according to this, it's still good. So yeah, we're gonna keep our eyes on energy. And the VIX, still inside month, but red. And I mean, strong shooter so far on the month. So depending on how Monday goes, this may 2-1, 2 down. I mean, that's the way it's looking. It's definitely not looking like it's going to reverse because the price is so strong down here. So on a 2-week, yep, we got the 2-1, 2 down, and we really haven't even hit this target yet. So looking at it on the week, yeah, strong. So VIX to 22. Yeah, VIX to 22. At least before it may find some support. As you can see, it's been finding support on the 200 for the most part. So it come down here, which of course will send the market. So we are keeping that in mind. Just like, yeah, this double top has gone. Like our inverse head and shoulders, this one has a double top. And so Apple just triggered the outside month. So the outside year is obviously no longer in effect. But I did want to point out that Apple is sitting right here at this 200. So if Apple decides to continue going and it breaks above and makes some support here, that's really bullish. Because y'all know, when price breaks above and holds, that's a bullish sign. Now, granted, you see what happened the last time it broke above and then fell under. But that was, what, July 29th? So it took about a month, which would coincide, I guess, with a few weeks of bullish activity, or a couple weeks up until midterms if we decide to go. And then I don't think the red is done. So, but I do know that right now the bulls are in control. So we play what we are given. Full time frame continuity. So, yeah. And on the week, it's just a 2 up. So nothing exciting. Microsoft. Now this one, of course, is different because of earnings, which is interesting because they beat. But I think that they lowered guidance, so they, investors weren't happy with that. But we have just ugly doji, which is basically indecision. Not quite sure what would happen. It would have to just be a 2 up or a 2 down continuation. And on the 2 week, the only thing is, it has triggered the 50% on the 2 weeks. So if we're red, and no, it didn't, not yet. It would at 231. So if we were red, then you can look for it to finish that 2 week outside bar. But you see, even though they dropped, though, we recovered. So this 3 you just don't know, honestly. One day. Yeah, this is still this was an inverse head and shoulders, but it really invalidated here at 232, but then we dropped through there and then recovered. So if bullish though, we do have a big old gap to target, which of course would push the Qs and SPY if Microsoft decides to go for that. Time frame continuity is kind of in conflict, but bullish activity can push that right back green. All right, so Walmart, this is something I mentioned last week. I just like I was just saying about Apple, when price moves above the 200 and stays above it or finds support there, then that's generally bullish. So I was speaking last week that Walmart, it actually had just poked above it, so I just wanted to keep watch, and it kept going. So it's still, if I'm not mistaken, this is no, it's not at all-time highs yet, but no, that wasn't it. It was the gap on the day. Yes, this gap here at 146.32. I just wanted to put that on y'all radar. Also, it has earnings November 15th. So this may be an earnings run. It may also, because it's done this, it may have to take a rest a little bit and then earnings may move it. But I don't see any reason that Walmart would miss. It's Walmart. But yeah, I just wanted y'all to be aware of that. On the month, yes, it's a 3. So it would be a 3-2 if it were to continue. Yes, let's add a resistance. So it would need to keep going if it's going to fill that. It may actually need earnings to do that. But yeah, McDonald's had earnings. I'm mad because I mentioned this last week and then just didn't even look at it. Forgot it and bad me. Hope y'all heard that slap. Same thing. It broke above this 200. So that's why I wanted to put it on folks' radar, and it just kept going. And earnings actually sent it. So if you were in this, again, congratulations. It is made a new 52-week high. So maybe a little bit extended there. But yeah. Snow, we were looking at on the month. It's actually, we were looking for it to do this, but it's made some good moves this month where you could have really just traded it, swung it for the entire week type thing. But it hasn't quite taken these folks out, but it did do an outside week. So again, this was a good play kind of both ways over the last few weeks, as you can see. It's catching it both ways. But yeah, this was a really good play on Friday, or even if you swung it from Tuesday or Wednesday when they did that 2 up 2 down. Yeah, so it has a gap now in the day. Full time frame continuity is red though, but if they decide they want to make some new shorts, that could be a target. It decides it wants to H and continue down. So, and then I wanted to mention the chips. Oh, you know what? Let me add ON. ON has earnings on Monday, I believe. So this QCOM earnings is Wednesday. So all of these actually have gaps to the upside and have been beaten down and have sort of inverse head and shoulders, except for AMD, on the day. So we can look to see if chips have a good season for them to make a move upwards, because they have been beaten down pretty bad. And a lot of them guided down. And I believe they probably did that. I agree with Brittany that they probably did that just like Apple, just so that they can beat and come in better. Now, granted, the issues with the China exports may be something to be wary of, but I really do think that the chips are going to do well. So QCOM, AMD, we've been talking about AMD for a while because it's been stuck kind of here for a long time. But we know that once it can finally break out of this range, it has a gap just like the rest of them. So if AMD does well, we can look for it to go for this gap here. And on the month, it's not really anything. And they're on the week. So yeah, it's not really anything. It's just more like, I think that this may go for earnings. If so, and this 2 week decides to go, then, you know, we can target this. That can be your trigger, this 70. I think the gap filled, but, you know, and it's in a tight space right here. So it's either going to do one or two things after this range right here. It's going to either break above this 8 and go bullish, or break below. And you know what? I had my drawings hidden. My bad, y'all. I wanted to point this out that, you know, it's following a pattern of this broadening formation where it tests it, but it rejects, which, you know, I really think the time frame continuity is really playing a part in that. But you can probably expect for it to find some more resistance there until it finally breaks through, if it does. And then note that it will finally turn the time frame continuity green above this 64, and then you can expect that it will go for that gap. Consequently, bottom of the broadening formation here is 54. If it does decide to fall for earnings. And then NVIDIA, it's the same thing. We do know that this fell a while ago, and it fell really hard for that reason. So there's that gap for VIDI. If the chips do the sympathy thing, I'm going to go to XOXL in a minute. And then there's ON. Of course, like I was saying, they have this Monday, so they're going to actually kick it off. It's ON Monday. I think AMD is Tuesday. Yeah, AMD Tuesday, and then QCOM Wednesday. Yep. NVIDIA is not until the 16th, but ON has this gap here at 69. So, and it has that structure that we like, that inverse head and shoulders here. And so, I mean, like I said, I'm bullish on semiconductors, but they all could definitely not do well, and boom. So, a cheap way that we have been talking about for a long time to play them is XOXL, though. It's just it doesn't move as much, but it's something you can buy in the money and load up and make money off of those dollar moves. You know, this has a gap here at $11, so it's not too expensive to buy a $9.50 or a $10 call on XOXL, and then, you know, catch that move. Once you're in the money, you know, you're just making that money. So keep that in mind. It also, on the month, still a doji, but a little bit better, and room to go. And the 2 week has just barely triggered. So if it decides this, I mean, the hammer is in force. If we are having a good week, this can definitely move up to target the gap, and then maybe this 2 week target. I really like the 2 week because it helps sometimes when you're looking at weeklies that are like maybe two continuations, but you want to see, okay, well, is it still going? Could it still go? You know, you have another week with the 2 week thing. Yeah, it could still go. And then that coincides with how the monthly is looking, that type of thing. So that is actually all I have. Did anybody have any questions for me before I pass it over. I'm gonna check the chat real quick.
I have a question, Lala.
Sure, what's up?
Hey, good afternoon, you guys.
Hey.
So this question is just regarding the uncoupling. So that's a concept. It's like I understand it when it's stated, but I really don't understand it. So you said that Tuesday is a new month, and
Mm-hmm.
you said something about the time frame continuity will be screwed up until the second week of November.
Yes, because
Could you?
I've been trying to actually find a way to explain that properly. I don't think that I explained it well, but I'm gonna try my best. So the way it works is the first day of the new month, if it starts on like a Tuesday or a Wednesday, the uncoupling wouldn't happen until the following week because you need to get a new week. So you know how it opens when we start a new month, the month opens, the day opens, the week opens. It's in conflict if the month opens in the middle of the week. Does that make sense?
Oh, that makes sense. Okay, so you just need a whole entire like full week of Monday
Exactly. And
of
then you need
data.
the next week so that it can, okay, now we have a new week. Now we have a new day inside of that new month that opened
Okay,
the previous week. Does that make
that
sense?
makes sense. That does make sense. Okay, perfect. See, you did well.
Oh,
You're great.
thank you. Thank you. Thank you.
Of course. Thank you so much.
My pleasure. But yeah, we'll let him. Before we go to him, though, I just wanted to point out something that Shay had asked really quickly on Spy. Shay had asked, do I delete my broadening formations? I didn't have this up when I was speaking about them, but really quickly, I just wanted to show her why I don't sometimes. And it's because, like, for instance, this downtrend, I had two downtrends marked on Spy, and when it broke through it, it definitely came back and kind of made it support and even the bottom of another broadening formation and then bust through the next one. And I left it there because I want to see if it's going to either continue or come do the same thing it did right here and come back down, and it can make that the bottom of another one. So I would, because we're over here, I would delete this one now because we're definitely not still in that downtrend, and that's not the broad information that I would draw. But yeah, I would leave this one up here for that. So I just wanted to point that out real quick.
Okay, good morning team from the UK. It's Phigo here. So what I wanted to talk about today is a smart money technique that I've learned off a member of Twitter, and it helped me bag over $17,000 on Friday's price action. So what I've got here is the Nasdaq futures on the left and the ES futures SPY on the right. And basically, what we want to look for is liquidity. So relative lows, looking left on the chart like we always discuss, or relative highs. Okay. Now I'm using the 65-minute time frame, which is relative to the hour time frame, obviously with an extra 5 minutes added on, and that enables me to see any fake outs or to just give me that extra 5 minutes to give me more confidence that I want to enter a trade. Okay, so with this strategy, we're only looking at ES and NQ like we just stated, and you only want to risk a maximum of 1% on a fully funded account. So what the strategy is we're finding either a daily, a 1 hour / 65 minutes, or a 15-minute low or high, and these will be our liquidity levels. So for my example, I've chosen the 65-minute / hour, and on Thursday night you can see that price comes down and taps this liquidity here. Okay, Now if we compare that to ES, when price comes down here, that same date, Thursday, it doesn't quite tap the lows here, and you can see, you can compare chart by chart. Okay, so if I just leave my cursor there, and if you scroll across, you can see that that lower low never touched the lower low from Monday the 24th, whereas if we come across to the Nasdaq, the lower low here is tapped out by this one. Okay, now what does this mean? So this means that because the NQ purged liquidity first, it taps it, and it doesn't make a higher high like the ES does relative to this low. It means that this is a smart money technique divergence. Now you might be asking, what is an SMT divergence? Okay, so what it basically means is we know that smart money is in play and that they're looking for a reversal. So the big ballers, the big players, for those who actually move the market, this is them showing their hand and telling us what they're trying to do. Okay, so what I also want to mention, if both NQ and ES both purge liquidity, they both tap the lower low, the play is invalid. So you want one or the other. It doesn't matter which one, you go with what the market gives you, but if they both tap it, then the play is invalid. Okay, so once the liquidity was purged here, I'm just going to bring this one bigger. It's not letting me. But yeah, once the liquidity is purged, we're waiting for either a 1 minute, a 5 minute, or a 50-minute order block to form on, so we can enter the body of that order block. So if I drop down to, you've got 2040 on the 27th. If I drop down to a 5 minute, okay, so we're back on the 27th, and this is that low that we just mentioned a minute ago. Now you can see from the chart, you can see where I've circled, and if I just turn on my fair value gaps, okay, so we've talked about liquidity being purged. We've gone down to a lower time frame, so we've got a higher time frame thesis of the 65 minute. You drop down to a lower time frame, and the reason you do that is because you want to snipe a better entry than the higher time frame. So I've come to the 5, you can go to the 2 minute, you can go to the 1 minute. If you have sub 1 minute charts enabled on TradingView, you can even go lower. Okay, so we want to we want to enter on an order block. Now an order block is an actionable signal. So you can see here, you've got a hammer candle. That would be your order block, and you'd place your stop at the low of this candle. So you'd place your stop here. If you're talking strat terms, you've got your 2 down, 2 down, 2 up reversal. Well, it's a free, isn't it? So it's 2 goes free. So you'd enter here and ride a wave up, hoping that your stop doesn't get touched out there. Okay. So there's your entry. Now we always talk about a break and retest. Anytime you get into a play, it's going to break and retest. So you can see how you've popped up and plays come back into this fair value gap area. Okay. Now if we go back to the 65 minute, okay, so that circle is the fair value gap I just showed you. We entered down here, didn't we, somewhere? So plays shot up. It's come back into this fair value gap. So ideally, if you really wanted to, you could have got another entry here if you wanted to wait for price to come into the fair value gap. Now for our entry, we don't care because we entered down here and price has come up. Yeah, it's retraced slightly, but we're still not being stopped out, and then price goes and runs. Okay, and that play is what enabled me to bag 17,000. Just to mention, the target, what you're aiming for, is the local time frame high. So I've marked the top of this candle here as a local high. We've entered down here. Okay, and you've got to remember all this hadn't happened when I entered. So this is irrelevant. The previous high was here. So we've entered down here, we've come up, we've broke, we've retested, and then we've gone. Okay, and that's what enabled me to bag $17,000 on Friday. Okay, so that's the technique if you want to compare the NQ with the ES to see which play smart money is looking at. Okay, so what I want to talk about next is your fair value gaps. I've got it turned on here. I can turn them on in this one as well. There we go. So let's just bring up let's see, SPY. I'm just going to take these indicators off. I'll talk through these indicators in a moment and let you know what they are and how I use them. We'll keep the fair value gap on. I think that's okay. Okay, so again, we're on the 65-minute, and this is our higher time frame thesis, isn't it? So if we bring up this area here, price has shot up here, hasn't it? You can see there's a clear uptrend. Okay, now what you want to do when price shows at hand and there's a clear uptrend or downtrend, or what I tend to do is I use the retracement tool, the Fibonacci retracement tool, which is this one. And if you're going in an uptrend, you look at the last low and you drag it all the way up to its high and pin it there. Make sure your magnet's on as well. If your magnet's not on, you won't get a true reading. And you can see price will come up and it retraces and then it goes again. So there is the break and you retest what we talked about. Now, what I've noticed is sometimes price doesn't always reach the 0.5 50% area. It'll come retest TTO and go. Now if we drop to a lower time frame, in fact let's go back to 65 minutes. Let's just delete this one and let's draw it again from this high to this low. Okay, so price is shot up. Here's your TTO. Okay. Now, price has then started to retrace upwards. You've taken out your 0.5, your 0.6, your 0.7, and your 1. So that can give you confidence once you get to this area, once you get past your 0.5, that you've got a bullish signal there. We've also marked 50% of the previous day's candle. So once price breaks above here as well, again, it's another sign of confidence that you're in a bullish area. Okay, so let me just drop to the 15 minutes. And we might as well actually talk about the Bollinger Bands that I had on. So if I just go back to my indicators, and I'm just going to make this smaller. So what I have on here are Fibonacci Bollinger Bands. So These in effect, for those that don't know, signal support and resistance. Okay. So if we look at that same trade we just mentioned a minute ago, price is pumped up. Okay, it's come above this band here. Now, what do we always talk about? A break and a retest. Okay, so it's popped above. Now, you could have got in here if you wanted to do a quick scalp, but the real money comes after the retest. So just try and remember that. So you've broken above, wait for it to retest. It's come back to this Fibonacci level. Now, once you've got your 2 down or your 2 up, I mean, you could have entered here, you would have lost a bit of money, but you have your 2 down, your 2 up, back into the range. There you go, and that's where you're making your money again. Okay. So these Bollinger Bands, Fibonacci, that show you Fibonacci. It's just like any other Fibonacci tool, just I prefer how these present themselves. And then now we're at this range here. You can see we've popped into a new range. Okay, you might get a slight retracement back, a slight retest back to this line before we go higher to here. Okay. If you're playing a continuation, you might not get a retest, you might continue upwards, but again, you know, you can target the higher area in line with your Strat target. So if we come across, you can see your 2's there, your next 2 up would be here, which roughly falls in line with the higher Bollinger Band. So you're here, if you come all the way across, it roughly touches it. So again, it gives you confluence. Okay, so that's your Bollinger Bands. The name of that indicator is FBB. Okay, so if we stay with SPY or SPX, doesn't matter which one. You've also got a breaker structure here. So we've taken out this high, slightly took that out. Price is traced down. We've taken out this low, these lows, and then we've come back up. So now you've got a breaker structure, and it's green. It's showing you that it's a continuation of the trend. But remember, once you have a breaker structure, you're looking for the retest before the actual move comes. Okay. But I wanted to share with you as well is another indicator called market profile. If I've got it on here. Here we go. So market profile. So instead of having your traditional volume indicators at the bottom of the page, what just signifies how much volume's been traded, the market profile tool shows me where price has been traded on the chart in particular areas. So the blue areas signify value, signify where most prices have been traded. Okay, where big money finds there's value. The grey areas is where there's non-value, where the least amount of prices have been traded. Okay, the yellow line is the volume point of control. This is where the most volume in that range has been traded. And without going into further detail, it can get a bit complicated, but you can get certain patterns. You can get the P pattern, you can get the B pattern, you can get the D pattern. But the way I look at it is mountain ranges. So this would be the high of the mountain, these would be the lows of the mountain. Okay. When price leaves this blue area into a non-value area, you can see it moves fast and it goes. So if we're here, for example, and we're moving upwards, we've left the value area, you can see how price shoots up, can't you? Yeah. Again, let's use this example here. We've been in a value area. Also to mention, when you have long mountain ranges or long bars, it's where price has been moving sideways. So sideways, sideways, sideways. It's not really doing anything, and that's a visual representation of the most price that's been traded, and that's why the bars are actually bigger. But once we leave this value area here and we break above it, you can see price doesn't mess about it. it goes, doesn't it? And the beauty of this indicator is if you look to the left, like we always teach, you can see VPOC lines here. So that was the most traded price in that range, and then another VPOC here. Now what this means is these are points of support or resistance. So if price is shot up out of this non-value area, and you've got your VPOC to the left, and it shoots through that, you can take it, it's aiming for this one. If it shoots through that, it's broken the resistance and it keeps going. If price comes back down to the support area, and it breaks through it, you can take it back, you're going down. So that's how you can use these for the different parts of the chart. It's much more useful than just having your standard volume bars. Okay, so I use these in conjunction with my Bollinger Bands. Okay, if I know I'm in a non-value area and you want to swing, for example, if say, let's just bring on the daily chart, makes it a bit easier. Oh, just to mention as well, that indicator, it's an intraday indicator, so it won't work on your daily chart or above. But if you bring it to the 4-hour chart, and let's just get rid of the Bollinger Bands a minute. Where are we? Okay, let's get rid of them. So if you're only using the market profile tool, you can see here how price is moving sideways, isn't it? Which is replicated by the length of the bars. But we're also in a non-value area. Okay, so if once price comes down into this non-value area, you're looking for a reversal back up to the VPOC. If you look to the left and you can see that there's market profiles below, then you'd be targeting those ones. But if there's market profiles above, you're targeting those. So you can use it as a tool to pick direction as well. So as it stands, there's no market profiles below us. So we're in this no value area here. Okay, it's come down and it's tapped. So you know that if you've got your double inside bars and you get a bullish signal here, so there's your bullish signal, you're in a non-value area, remember, so we're aiming for the yellow line. So there's your initial break, there's your retest, and then we're off. So we're coming out of this non-value area now. Price comes up into the fair value gap, price comes up into the fair value gap, and then we're going. And you can see where we're heading, can't you? We're heading for this VPOC. Okay, now if price now then breaks through here, where are we heading? We're heading for here. Yeah, because now that forms a resistance and this now forms a support. So this is why this tool is really useful, because you can use it intraday to give you bias alongside your time frame continuity, alongside your Mobo Bands. So for those who don't know what Mobo Bands are, these are adjusted Bollinger Bands. Okay, and if I click into the settings, the Mobo Bands have a length of 13, some might say 12, and sorry, the DPO length is 13, the Mobo Band length is 10, and you want to type in a deviation of 0.8 for down and a deviation of 0.8 for up. So you can actually amend normal Bollinger Bands with these settings to create a Mobo Band if the platform you're using doesn't have Mobo Bands as an indicator. It should do though. So what are Mobo Bands? For Mobo Bands, signal when price breaks above a range and it gives you a buy or a sell signal. Now for options, if you are trading options, this middle grey area is where FET is killing you. Okay, it's where the chop is. Okay, so if we move our cursor here and we come sideways, you can see that there's no buy or sell signals here. If you look down onto the chart, okay, so there's no buy or sell signals. So if you're entering a position here to go long or to go short, you're getting chopped up. But as soon as the yellow line, signal line, pops above the higher Mobo band, you can see you've got a nice move there. Okay, again, we've talked about break and retest. So you've got your break. You could enter here and stomach it and hold it if your stop's low enough, but you've got your break. Now you know to retest or wait for the retest, so you don't get in yet, and then there's your retest, your TTO, 2 down, 2 up, non-value area, we're going up here. Okay, so your mobile bands are a great tool to indicate when to get in a position, alongside with the knowledge that you know to wait for a break, wait for the retest, what other tools you might use. And as long as you get a break above the mobile bands and it stays above it and it doesn't come back into this area like it has here, you're good. And we've talked about using the mobile bands on your chart, your contract chart, to help you get the best optimal entry and exit using Strat targets on the chart. So if you've not seen that video, go back to the other videos that Lala's posted and check it out, because there's so many gems that have been dropped in there. Okay, so let me just remove that market profile tool off there, and I'll take that off. I'll take the fair value gap off. Okay, so let's look at BPRs. So BPRs are signified as balanced price ranges, and this is areas where there's been fair value gaps up and down within the same range. So to explain what I mean, if we look here, then an energetic move upwards, creating a fair value gap. Okay, in the same range, there's an energetic move downwards, creating a fair value gap. So the way I've coloured these are orange is bearish, purple's bullish. So if we use this example, okay, so there's a fair value gap, you've got a gap, it jumps up, and another one. You're targeting the local lows from your BPR back. So this is a bearish one. So once this box signifies itself and pops up on your chart, you're targeting these, and you can see prices come down perfectly. Okay, if we look to the purple ones that's shown here, so you've got an energetic move down and you've got an energetic move up. So two different fair value gaps within the same range. So your orange box would pop up here. You've got your 2 down, 2 up reversal signal anyway, and you're aiming for the local highs. Okay, and you can see price goes up there, takes them guys out. So these are balanced price ranges, which is they're really good. It's another tool to assist you if you want to do more of a swing rather than a scalp. Again, you've got another one here. So move down, fair value gap up. Okay, targeting previous highs. So those are BPRs, if you want the information.